Infosys kicked things off with a solid set of second quarter numbers, but the stock actually corrected over 8% from the session highs post its Q2 numbers. Optically, the numbers looked good with headline numbers beating estimates. In fact, the dollar revenue growth came at 6%, which is highest level in 16 quarters. In rupee terms, the revenue figure came in almost 9% higher at over 15,600 crores. EBIT margins expanded to 25.5% and profitability too saw a 12% boost. The FY16 dollar revenue guidance though was revised to account for the Forex fluctuations, revised lower that is. Here's Reema Tendulkar with the reasons for the big intraday correction that we saw in the stock.
Yes, that seems to be the key question. Why did Infosys fall when all the internals look good? Well, the key reason for that could be because despite a strong Q1 and a Q2, the company chose to maintain its FY16 constant currency guidance of 10 to 12%. That would mean the outlook for the second half of the year is going to be a lot worse than what the analysts had penciled. In fact, if you see the asking rate for Q3 and Q4 to meet its guidance, it stands at minus 2.2% at the lower end, extending up to plus 0.2% at the upper end, which means at best it's going to be a flat performance by Infosys in Q3 and Q4. And the management commentary too in the press conference, they alluded to retail being a bit softer, some client-specific issues, some loss of momentum in insurance, seasonal furloughs in manufacturing, all this impacting H2, making it challenging. But that apart, the other reasons include profit taking after the 16-17% run-up that it's seen in the last 2 to 3 months, the resignation of CFO, the second big resignation in the last 3 months. They've approved the ESOP plan, which would entail a dilution of close to about 2%. The volume growth of 3.7% is a bit tepid. So why was that? And while the pricing has contributed to the revenue growth, is it sustainable? And finally, even the top line growth is 6% stellar, but it was contributed by a one-off of $23 million. But that said, even if you strip it out, you still get a 5% revenue growth, and that would be a beat. But the two key reasons is the outlook for the second half of the year is a little more subdued than what was expected, and profit taking.
All right, Reema, thanks for that. Well,